We're joined by Matt Orton, Head of Advisory Solutions and Market Strategy, but he's in our Mumbai studios today.
Yes, it's wonderful to join in person.
Matt, great to have you here. How are the Mumbai rains treating you?
It's not too bad. It's not dissimilar to Florida, which is where we're based, so it's very similar.
Oh, wow. That's quite a comparison. What about what is raining down in the White House? I think it's a tariff a day, pretty much now, or the reminder of a tariff a day. Have there been any scarier words than a friendly reminder for a tariff deadline?
It's always amusing to watch the headlines because I think the headlines signal a lot of the uncertainty that's in the market, but at the end of the day, the actions speak louder than the words. So we saw the 50% tariffs in steel and aluminum. That's not that surprising given that that's a priority, especially after you saw the merger go through with Nippon and Japan. But at the end of the day, I don't think it changes the economic trajectory greatly. We know tariffs are something that we have to live with in this world. I think Trump's been very consistent with where he wants to go, and I think assuming a 10 to 15% baseline tariff is probably the long-term end game of where we'll be, I think is fair. But I think the key thing is that we've taken all of the left tail scenarios off the table. So even though 50% here, threat of tariffs over there, at the end of the day, it's all about trying to get a deal. And I think that's what is consistent. We have July 9 is the deadline with respect to the 90-day tariff reprieve. And I think Trump is trying to apply as much pressure as he can to get some deals in line and worked out so that we can have positive announcements and some momentum and successes that we can signal once we get to that deadline.
Okay. So my question is, of course, in the context of everything that we've seen, suddenly you see the dollar back in the game, right? Overnight, you had a little bit of strength come through, but then we've seen a slide from those heady levels of 108 plus for the dollar index. It's below 100 still, and also against a few pairs, it's lost ground. What's the future for the dollar? What are the implications for global flows? Because you've seen yields move up. At what point, in your opinion, does that become too attractive to ignore?
Yes, so Alex, my expectation is that the dollar is still in a longer-term downtrend. It's not surprising that we're seeing a little bit of strength after such a prolonged period where it's moved lower. But I think with tariffs in place and with uncertainty that's still on the table, and the likelihood that you still see some foreign repatriation of assets moving back home, you're likely to see the pressure remain in place, which is a good thing for the emerging market complex. So one of the key things I talk to clients about is finding ways to better diversify portfolios. And to me, that's diversification across asset classes, it's diversification across sectors and industries, but also geographies. It's been a really long time since I've had conversations with our clients where there's a willingness to look overseas, and you've seen tremendous returns from a lot of different markets. And I think emerging markets are benefiting and will continue to benefit from a lower dollar and from lower oil prices, which is another reason why India still stands out as one of my more favored markets on the global stage.
So Matt, you know, you're saying India stands out. You are seeing long-term potential. Is the ground story telling you the same thing, that you're in India? Because from an economic perspective, you see a strong GDP number. A weaker dollar becomes positive as well. And your global conditions, to some extent, are favoring investments into the country. If that is the scenario, which bets would you actually look at in terms of sectors and stocks within them?
Yeah, so it's a great layup for the case for India. And I think there is a lot of positivity. So from all of the meetings I've had with company management teams over the past 2 days, I'm pretty enthusiastic about the fundamental prospects of a lot of companies. And I would say larger private banks remain very, very interesting and top of mind for me. The auto sector is increasingly interesting. I think it's not just M&M anymore. I think there's a lot of other opportunities as companies try and build market shares. There's a push for EVs. There's room to build margin into those companies. So those are two areas that I think look interesting. The consumer story in India is a different story. I think that's a more challenged backdrop, especially as you're seeing spending come back. But there's always going to be some outstanding names in there, perhaps those who are more levered to content generation, media. Those might be a little more interesting going forward. But you look at a country that's the fourth largest, soon to be third largest economy in the world, you can't really ignore that, and especially with the RBI likely to cut rates on Friday, that's a really supportive story, I think, of hopefully getting a little bit more of that consumption back, and companies, including banks, can weather that storm very, very well. So I think it's still a very exciting backdrop to be looking at India and making investments, especially if you get some pullback or consolidation.
One follow-up in terms of banks, you mentioned about expected rate cut that could come in, and you still like the banks, but do you think the margins could be pressurized? And if that is going to be the story, which segment of the banking space would you be going for, an ICICI or an HDFC, or would it be the PSU bank, like an SBI?
Right, it's a great question. I would avoid some of the PSU banks. I think an ICICI or HDFC are two names that I like a lot, because the banks are balancing margins and growth, right? So margins are going to be under pressure as rates start to come down. But there's a pretty quick transmission mechanism right now to deposit rates coming down as well. So they're able to weather and navigate that a little bit better. I would expect to see credit growth hopefully start to expand. Business loans have been a standout for some of the private banks as well. And as these companies are able to better mine data for their customers and better penetrate, get them into credit cards, using them more for banking, there's a lot of levers they can pull to preserve margins and still hit some of their growth targets and hit the ROE numbers that I would want as an investor. So I feel pretty confident about their ability to execute.
So just a couple of questions. I think you have a more a charitable view on IT services than most have. You believe that the worst is over. Want to know more about that, considering that the uncertainty is still very much there on what's happening with the US economy. If the US economy is going to shrink, and what the OECD outlook is dismal, to say the least. Do you see IT services actually weathering the storm?
So IT services have just been in a terrible place lately. It's been just destruction of value over the past half year, and it makes sense because of the economic backdrop, like you pointed out. But from some of the conversations I've had with teams over the past week, I think they have projected very, very low expectations. And I think the expectations have been set so low that they can actually beat the numbers that they're putting out. So I think as an investor, it's not so much the absolute, it's the relative movements. It's the derivative of where things are actually going. And so if you can start to see them extract value from areas like Europe, which are actually starting to grow, financials across the world are doing well. And so the IT services business, especially with respect to AI, is doing well. And actually, economic contraction means businesses, in order to preserve their margins, probably want to find ways to have cost savings, manage their workforces appropriately, to which they're going to look to some of these IT service giants to do. So there's still a pathway forward for growth. I think it's a higher risk, but the risk reward, given how low some of these names are, looks fairly attractive to me. So it's a dip your toes right now. As the story hopefully starts to play out, you can add to your positioning, but it's not an all-in bet at this point.
So therefore, I'm guessing you're keeping your ear to the ground and you're trying to understand, and here's my question. In the IT space, would you bet on the companies that have been at the forefront over the last couple of decades, particularly the last decade, or would you venture further? And you look at companies that are in new age technology and trying to catch that next wave of services growth. And how do you see revenue profiles change? Do you see the mixes of the service that they provide change? And therefore, would you expect certain companies to have a higher revenue trajectory than others?
I think you do. So I think you need to have a combination of both, because the new age companies, those who are much more levered towards artificial intelligence, those are the names that I think are doing well right now and have an immediate path forward for revenue growth, because that's where companies are making investments. When you look at some of the larger names, those are names that bigger companies, bigger contracts are going to come to. So you want to have a balanced approach, but if you're going to look at some of the larger IT services names, you need ones that are not heavily exposed to manufacturing or retail or telco. You want names that are more exposed to financial services, perhaps IT, and that have the ability to help with artificial intelligence too, because that's probably the growth engine, at least in the short to medium term.
Not asking for recommendations, but what's on your list that you're looking at right now?
So Infosys is always on my list, at least of names that I'm looking at. I think they're particularly interesting. Tata Consultancy Services is another name that I think is interesting because they do have a really good AI practice. So I think those are probably the two most important names. Tech Mahindra, I think, is also interesting, but further down on my list of names.
Just wondering, of all the companies that you've met while you're here, any standouts for you, Matt? And what is the one message or the common sort of narrative or message that you're getting in all of these conversations?
So I think the main message to start with is optimism. I think the management teams, although management teams are always optimistic.
They're unlikely to come and tell you, oh, things are really bad. But
Of course, although you're paid to underpromise and overdeliver. So I do always take that with a grain of salt as well. But I think companies that have leverage to, I would say, global growth are all fairly optimistic. So especially companies that have businesses in the GCC, where you're seeing tremendous amounts of money being spent on projects and investments, not only in hydrocarbons, but in artificial intelligence and sovereign AI, those are really, really interesting. And I'd say the one company that I left most optimistic about, that's been on and off my list, but is definitely on right now, is Adani Ports. I think what they are doing with respect to managing the supply chain and trying to find synergies and have that as a sell, I think is really compelling. And the business overseas as well in the Gulf is also very interesting.
So multiple aspects that you're looking at in terms of Adani Ports. In fact, that has been one of the companies that has outperformed in terms of their earnings expectations as well in the fourth quarter. Staying with this infrastructure theme as well, from your last visit to now, I'm sure you've seen a stark change in terms of the developments that are happening. And if you have to look at infrastructure as a space, anything that, anything apart that stands out for you that could be an investment bet?
So infrastructure has been more challenged, as you're alluding to. I think the expectations you had right after the election have not come to pass, but there's still growth, right? So there's still going to be top-line growth with respect to infrastructure spending, just not as much as I think a lot of people wanted. So as I look at where I might want to be positioned, I think you want to have companies that are exposed to overseas infrastructure projects as well, which is why in Adani Ports, I think, has been able to perform so well. But that area, I think you need to have that additional diversification. When you look within India, companies that are poised to build, I'd say, last mile connectivity to ports, rail systems, that I think is going to continue to be a source of investment. You look at the coastal highway here in Mumbai, that's been an amazing transformation. And there's a number of projects like that that are still being financed.
I'm curious, when did you last come?
So I was here last year, and this before the whole connection was finished. And I drove here this morning from South Mumbai. And having that ability to get here, I was here much faster than expected.
Okay. So you enjoyed the coastal road. And with the rains right now, that's a beautiful view.
Drive.
All right, great to have you here, Matt. Please come back sooner.
Absolutely.
Always more fun to do this in the studio. Matt Orton there for you.